my wife and I are in our early 70s, and both of our families are pretty much long-lived into the 90s. And we had a salesman come talking about long-term care insurance. And I know you've talked about it in the past, but I didn't pay attention. So could you just review some of the things to watch out for?
Sure. So, long-term care, I like long-term care insurance, as assurances go. I think it can be a great source of protection. The downside, of course, it's very expensive. And back when they first came out with long-term care insurance, I remember very well. And when they first came out and everybody was kind of learning about it, they never raised their prices. That's what they sold it on. And so the prices were, so whatever price you got per month, whatever your monthly premium was, annual premium, whatever it was, it never changed. And that's what it was. And you were locked into all the benefits as well. It was going to be X amount of dollars a day, so on and so forth, for a period of time. That changed very quickly because a lot of those companies don't offer it anymore. They gave it up because it was such a losing proposition for them, because the healthcare costs were going up dramatically. And so they now, unfortunately, it's very expensive and they don't lock in the rates. But there are some kind of hybrid policies out there now that act a little bit like an annuity, in the sense that you put a lump sum of money in that grows over a period of time. For that money, you get X amount of daily benefit for a period of time that will be as long as your money lasts. So basically, if it's 3 years, 4 years, 5 years, it depends on how long you have that money in there. The nice thing about those is that if you never use it, or if you just use some of it, the rest of the money goes to your heirs. So you're not, paying out every month to get nothing for it. So that's one type of product that's out there now, and I kind of like those because of that benefit of getting some of that money back. The other thing is that you need to buy it right, and that's one thing you need to watch for. So I don't know what it's like in the part of Texas where you live, what the average daily benefit is to be, let's say, skilled nursing, or make sure that your policy always allows you to have home care. To pay you the same amount, whatever you agree on, but to use it for people coming in the home as well. Most do, but you need to ask that question. But the problem is, especially with somebody like you that has that longevity, both of you, that you want to make sure that it has an inflation protection rider on it. Because let's just say now that the average daily care is, $230 a day. So if you get a policy that is paying $230 a day, 20 years from now, that $230 a day probably won't even be half of what it's going to cost. So the problem with that is now you end up on Medicaid anyway, because it has to step in to pay the additional cost. And if that's the case, you probably could have done without the insurance altogether. So if you're going to buy it, you have to have a daily benefit that is pretty decent, and you have to have an inflation rider. The other mistake that people make is the statistics are way off base. They're a little bit better than they were when they started. So when they started, the average stay in a nursing home was 19 months. And of course, that's what killed them, because, it just messed them up, because they were paying for 3 years. Their actuarial calculations when they sold it were based on that, and it ended up being 3 years for most people. And so you got to make sure that you have a set amount of time that is reasonable that you're going to get. Obviously, a lifetime benefit is the best to get, but that's even more expensive. So The upside and the downside is you can add certain things and take certain things off. The downside is you can take enough things off to make it affordable, but then it's really not going to be worth much. And you can add enough things on it to make it, so you can't afford it at all. Keep in mind, whatever you do, the prices are going to go up in all likelihood, unless you do that kind of hybrid that I was talking about early, that, it's a set amount of money. You're going to put in $100,000 and you're going to leave it alone. It's going to grow. And maybe by the time you need it, you're going to have, $310,000 in there, and that'll pay. And if you never use it, it'll go to your heirs. So there's a lot of different components to it. And it's just really critical that it's going to do what you want it to do and what you think it's going to do. The problem is it's very expensive. Another thing that you can consider, I used to recommend this more than I would now, but a lot of people that really want something and they can't afford it, but they want a good policy. I've often said to the men, don't get it on you, because, there's not too many men in nursing homes for two reasons. One is our wives, generally outlive us. And the other reason is our wives tend to be caregivers to us when we're home and sick. And then they're left alone without a caregiver. And it's far more important that our wives have long-term health care than it is that, that we have it. So that's another thing you can consider anyway, trying to, maybe save a little money.
Hey, remember to click the subscribe button right here on the screen. And don't forget to hit the notification bell so you'll be notified when new content is added. And more importantly than anything, you don't want to miss all 3 live hours of Financial Issues every day from 9 to noon. And you can watch it on FISM.tv. That's FISM.tv.